me into my zone. Please don't let me into my zone. 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 Please don't.
Well, welcome back to Krown's Kudo Cave on this very dark and dirty Sunday morning over here on the first day of December. I want to wish you a happy December. And right now, no intro from Elsa because she's actually sleeping right now, so we got to be very quiet like little church mices. No, fuck that. This is my place, bitch. Anyways, we got a lot to talk about today because it is going to be a long-term analysis Sunday day, and we actually had some pretty damn good price action emerge from the overnight session. Of course, I want to talk about my own trading activity, follow up from the long that I took a few days ago around that 7,500 number. I'm obviously out of that, taking profit on that one, but we'll go into the details of it in just a bit here. I do want to make sure that I talk about everything that I need to talk about because I always write something out that like, hey, mention this, never fucking look at it ever, but I have it right in front of my face right here. So I want to remind myself to talk about the new website, the links in the description below. That's where everything from this community, from this endeavor is going to be going on. It's crowntrading.net. And again, the links in the description below. That's where you can find the all the programs, which are now on sale for 20% off for the holidays. Well, it's not necessarily a holiday right now, but that made up holiday, Cyber Monday, well, it's coming up and in just one day. So I believe the sale goes on for just like a smidgen longer. And then after that, no more. So with regards to that, no discount, no discount code needed. It is going to be baked in, and overall, what else do I want to say about it? Yes, of course, with anyone considering the programs, make sure that it's a good fit before ever getting into them. Take advantage of the free material on this on this channel first. That means the the technical analysis 101 playlist and the options playlist, of course, as those are built up from a very beginner standpoint. And I mean, that's, of course, that's not a bad thing, but make sure that you understand that first, so that you can get an idea of kind of what's applicable to you, what's not. Of course, the programs themselves are very, very long and a lot more in depth and a lot more professional than what I show on YouTube, of course. It's not going to be like just a random video here and there. It's going to be a lot more in depth. I mean, for example, the technical analysis program is about 43 videos long right now, and each video is somewhere between about 45 minutes to a little bit over an hour. So this is a pretty in-depth program, and especially for the options, which is even more so intense. So I would say, if you're not comfortable with technical analysis first, definitely don't do the options program just yet. Maybe hold off on that for a little bit of time. And I always say, like, I'm not here to be your dad. I'm not here to tell you what to do, what's good for you, what's not good for you. But what I can say is, if you want to get the full value out of that program, make sure that you have the time to dedicate to it, because again, it's 35 hours long for both of them each, and realistically, it's one of those things where it's really designed for you to come back to it over time, over the next 6 months, over the next year, over the next few years, as your understanding deepens of the content, and you can take on deeper meanings of what's discussed in those videos. So with that said, the jewel is still not for sale. I've been getting a lot of questions for this. We will be bringing it back hopefully around Christmas is the idea, like a little bit of a Christmas gift, and at that point it will be a subscription model rather than just like a one-time thing as we usually as we used to have before. Just makes more sense, and realistically we kind of wanted to put a little bit of a damper on it. Not that it was like getting too huge or anything, and I mean, we could even like 20x to sales, 100x to sales, fucking 1000x to sales, and it still wouldn't make any difference to its edge on in use. But still, for me, it's like I kind of want to keep it under wraps, like my secret little tool essentially. I also want to talk about the video that I uploaded last night with Mr. Canfield. Great story. I'm really fucking enjoying this podcast series, and I'm really happy to see the good responses from it, because it's just like, it's very, very cool to be able to talk to other people who are traders themselves, who can verify themselves, and they have these phenomenal stories. Both Jackie and Jake, just amazing, and they all start with J's in fact. So the people that I bring on, you're probably going to notice some sort of a theme going on with them, and I just think it's so fucking inspiring. I mean, look at where some of these guys come from and the hurdles that they have to tackle in order to get in this game. That is supposed to be incredibly motivating, or at least I find it incredibly motivating, because it's like, man, if someone can start at that point and get to where they are right now, fucking hell, man, then what's my excuse essentially? So I hope to do that a little bit as well myself, but hearing these guys' stories, you just realize that it's the amount of effort and work that they put in over time that has led them to be successful, which anyone can do. It's just it takes a long-term learner's mindset essentially. What else do I want to talk about? I think that's about it, man. Anyways, I'm probably forgetting something, but fuck it, man. it's the new month. It's December, so we got to talk about some long-term analysis. So with all that said, wishing you the best, and the happiest over here from a very dark morning over here in Helsinki, Finland. And I'm pressing that button, and I'll see you. And there she is, Bitcoin on the 30-minute. Nope, let's get the fuck off this crack trader time frame. Let's go on to the daily. Or sorry, let's actually not even get onto the daily just yet. Let's go on to the monthly. Okay, so the monthly has really set my biases in place now, if that's a proper term. We did close below the 10 simple on the monthly, which I was actually not looking for. And again, this is why my opinion is divorced from my trading. My opinion is irrelevant. I don't trade my opinion. I trade technical analysis, what I like to say. And because I saw CME's close basically above the 10 simple on the monthly, they closed at 7,800. I was expecting that we would close above, and that would likely open up the doors for potential move into the lower 8,000s, low to mid 8,000s. Because we did not do that, my bias on that is completely changed, as I spoke about yesterday. And this is why I like to wait for confirmations on price action, especially on the higher time frames when they're right around the corner. And the way that I see it right now is that this is certainly more on the bearish side, but am I just like blindly getting short right here right now? No, I would be looking for this next month to have a range between the 21 and the 10 simple, so basically between 7,000 or 7,100 and 8,000 essentially. So I actually do think that it's possible that we get another push back up into the upper sevens, maybe even low eights, and test around there. But for me, I will be looking for sells within that region. Bringing up our momentum oscillators right here, we have officially seen the monthly Stokes cross down. They are rejecting the bullish control zone, and monthly RSI is really not good. I really dislike this one. This was probably the biggest fear that I had coming into the trading day from yesterday to today, this whole last month, because this was just all a fucking slice through and rejection of the exponential on this. Usually when we get a setup like this, it will at the very least come back down and test around the bearish control zone, and usually even get stuck in it. The weekly has a very similar signature, where we had that first initial bounce off the bearish control zone after being away from it for quite some time, come back up, test the exponential, and then boom, down. Now we're getting comfortable within it, and it looks to me like we want to stay in there for quite some time. So looking at this, I do think that Bitcoin overall bearish. The trend on all higher time frames is down. Weekly trend is still very much down and not changing around anytime soon until we get back above 9,500, 9,600 on a weekly closing basis. So that's more than a couple $1,000 away. It's not happening today, not happening tomorrow, not even happening the next day. So get on over here, make sure that's everything's good, and okay, great. So yeah, looking at this right now, the weekly is still kind of setting up for a little bit of a potential bounty bounce, but I'm not looking to be a buyer of this. I'm not looking to be a seller here either. I really want to get my areas and be patient. So this means that I might actually not get the next big trade, which that happens, man. And realistically, if Bitcoin pops back up here, or sorry, if Bitcoin doesn't pop back up here, I won't take that next short for a positional directional trade. I'll just be a scalper playing ranges, which I'm completely fine with. But I want to get my areas. Otherwise, I will not play the game. It's just had too many, in the past, too many painful experiences of front running myself, and they typically don't end out too well. So looking at this right now, Bitcoin on the weekly, if we do close above the 89 exponential moving average this week, which is going to be closing today at 7 p.m. Eastern time. If we close above 72.50, I do believe that we will get another bounce attempt to the upside, probably into the upper 7,000s, over the next couple of weeks, something like that. But I would be looking for a big rejection there based off the monthly. That's where I'm going to be, managing my next major trade essentially. So man, there's so much on my mind right now. We really need to get through it. But I do want to go back down to the lower time frames briefly here, because I want to talk about the trades that I was looking at yesterday. So remember, I posted a live trade video somewhere in this breakout right here, where I longed the breakout, took profit somewhere in this region right right here for an average price of like $200 price action, and then kept the rest and kept like half of it or a third of it, and basically had a stop loss. I remember precisely right around 76.50 region yesterday. So obviously I got hit on that stop loss, and right after that stop loss was hit, I actually did not take the short after that. It was getting a little bit late in the day for me, and it's a Saturday, and I try to like take it a little bit more easier on the weekends because it's just probably a better thing to do. I was also playing a video game too, which was really, really fun. It was called Star Wars Jedi Fallen Order. It's fucking amazing. I just beat it too. It's fucking phenomenal. God damn, man, that shit is fun. But yeah, so while I was bullish yesterday, I want to be very clear and say this: my opinion was bullish yesterday, right? And I will be bullish, as long as we're above that 76.50 pivot. The second that we destroy that 76 pivot, where was the target down to? 72.50, and perhaps even lower than that. I mean, I do think that 71.50 down here is very much possible as well. But looking at this right now, Bitcoin played that up pretty damn well. So this is a great example of my opinion being wrong, but the TA being right. And the TA is not even right. It's kind of neutral. It's just saying, hey, we have a pivot right here. If we lose this pivot, we're likely going to go down to the next level. So level by level has just been the easiest way to trade Bitcoin as of recent times. So looking at this right now, Bitcoin looking like it wants to kind of play a little bit off this 72.50 pivot that we just saw to the downside, but pressure is down on just about all lower timeframes and higher timeframes now. Looking at the 4-hour, we do see momentum oscillators pointed down here. 4-hour Stokes absolutely nosediving. 3-hour Stokes going to be down there as well, although they are kind of losing momentum. 2-hour Stokes probably going to be crossing up, and hourly Stokes are kind of snaking around right now and crossing up as well. So are we going to play out a bounce from this area? Yeah, probably do. Probably do play out a bounce from this area. Tentative target would be somewhere right around about 74.50-ish region perhaps. As I look at my other screen right here, let me just make sure that everything is all well and good on the cones. Let's see, where am I? 1, 3. Okay, cool. Alrighty, beautiful. Anyways, let me just get it right on over there. Okay, great. So I want to make sure that, if I actually do see a position here, I can actually take advantage of it. So I'm sending things up on my main account right there. But as it is, Bitcoin, is under pressure. And while it probably does have a little bit of a short-term bounce here, I would be very, 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 very skeptical of it, especially as long as we're below this last breakdown point that we saw from last night. If we go over here to the 4-hour, you'll see it quite easily. Just this guy right here, where the 21 exponential moving average is kind of governing right now, which is around 7,500. So we can bounce around, all day and fill this area out completely fine. However, longer term, it does suggest that we probably do test a little bit up, but then get further continuation to the downside, early on into this week, and then over the next couple of weeks. I'm not necessarily convinced that we're just going to absolutely slice through 7,000 to the downside just yet. I think that we're going to play out, a range between 7 and 8, and then maybe early in the next new year, we will play out that downside. Anyways, looking at this right here, what do we have to do? What are we looking at on the 4-hour? I think that's about it on the 4-hour. Let's go to the 12-hour. 12-hour has lost both the 21 and the 10 simple thus far. Still got 4 hours and 48 minutes left to go, so it's plenty of time. But looking at it right now, even if we were to get back above the 10 simple, which is around 74.50, funnily enough, in the 21 is about $100 higher than that. Even if we got back above there, it still just kind of implies a range where we are right now, and pressure's still down. We do see 12-hour Stokes also getting very tired here. We see 12-hour Stokes looking like they want to cross the downside, and 12-hour Stokes have been phenomenal, for lack of a better term. Just blindly trading these for the last 10 months or so now has been very profitable, and we are about to see them cross down as we lose all major moving averages. That's my main point. So as long as if this next 12-hour ends below both the 21 and the 10 simple, I would be looking for that to officially turn down, and we probably do get forced back down to the low side of this range, somewhere around like 7150 to 7100 sometime this week, I'd imagine. Timing of these things I don't really care all that much for, and more importantly, looking at 12-hour RSI, we're going to lose the exponential here as well, it looks like. Do we have any hidden bearish divergence in play? Technically do, between this point over here and what we're dealing with right here. It's not, well, maybe let's go to like a daily. We should see some here between this point and this point. Yes, indeed we do, and that's putting us back down to the low side of the range. Yes, around 7150 is kind of where I'd be looking towards. So yeah, and of course the daily having the 10 simple, pretty much where current price action is right now at about 73.35. If we do there today, I would be looking for tomorrow, Monday, Tuesday, to work its way back down to 7150 to 7100 even. And remember, the death cross on the daily is is strong. It's getting played. Not only that, but we saw the 21 cross the downside of the blue 3/7 cent nice benchmark average right here. Usually when you get that cross, you come up and test it, it's either going to provide a very nasty rejection, which is kind of what we're seeing right now, or you actually do shoot right up through and test around this area. So fair enough. It looks like we're getting the more bearish resolution of this. And looking at momentum oscillators on daily, we do see that daily Stokes losing momentum right at the edge of the bearish control zone once again. So pressure's on here. Certainly very much on, and like I said, hidden bearish divergence on daily RSI. I mean, we never really got an uptrend on daily. We did get an uptrend on the 12-hour, but not the daily. So hidden bearish divergence between this point and this point right here. RSI making higher highs within the while price actually makes lower highs within the overall context of a downtrend. Basically, the bulls are using more power and getting less of the way, as they were before. So as long as this area is kind of intact right here, 7850, the big pivot on the market to the upside, even from a daily time frame now. So you've seen this get walked down over the last couple months, right? Remember before it was like 10.3. Once 10.3 broke, that's where we started to get more macro bearish, I suppose. Then it was this local high right here at about 9.5, then 8.5. Now we're getting forced down a little bit more, and it's really 7.8, 7.9. So all of these areas are, they're just getting sliced right through, which is very, very nasty. A weekly jewel is actually a continuation sell signal as well. It's like a hodl your short signal from this short signal right here, late July. When Bitcoin was around 11.5, 11.6, yeah. But again, when we're talking about a weekly, it's not playing out like today or tomorrow. So yeah, lower time frames looking like they want a little bit of a bounce here. I don't really have a fully thought out, idea for the bounce. Maybe 74.50, maybe 75.50, something like that. But overall, higher time frames are still very much bearish, and the month is the one that's really driving things for me right now. And so we did officially close below the 10 simple. I should also say that, when I used to trade traditional markets, when I was a market maker authorized trader on the floor of New York Stock Exchange ARCA, I'd use the 21x benchmark moving average on the monthly here to judge if a stock was generally bullish or generally bearish over a long period of time. And Bitcoin, once again, kind of flirting around on it, really looking like it wants to lose its footing as momentum also has turned down, is very reminiscent of what we saw right on over here, and also what we saw back on over here. You can see that anytime that Bitcoin's spent some time below this area, it's not been good, and looking like we're kind of gearing up for another stint below as well. And technically speaking, your next target after that's going to be somewhere around the 55, which would be that mid 5,000 target over time. And again, I'm not saying that this is happening today or tomorrow. Probably not even happening this month. It probably happens sometime early next year, Q1 of 2020, I would imagine. So yeah, right now, things are really setting up for likely a snapback to test around this region, but overall, I'd be looking for it to. This really did set in and really did damper some of the more bullish hopes of this. I was really hoping, if the bulls were going to have a little bit of a short-term reversal, I wanted to see a close above the 10 simple on the monthly. We didn't get that, unfortunately. Unfortunately, if you're bullish, if you're short, well, then fucking congratulations, man. That's awesome. Let's see. Let's look at what the accumulation distribution indicator is looking like right now. Remember, I only care about slope on this one. Did we retain the positive slope or not? The positive slope, which had been pretty damn aggressive, really going all the way back to our January. Mark over there has lost a little bit of its luster here. Of course, it's still positive, so not necessarily bearish. It's not necessarily full on bearish, but it does take a few ticks for it to really turn down. Of course, it's going to slowly lose its curvature, but this would say that, hey, caution. Just looking at the slope of this has been phenomenally impactful throughout the history of Bitcoin, really on the monthly. The slope changes, it's called the bull traps, extremely well, and the lows actually to the T, funnily enough, in both 2014 and 2018, and both the highs, before that. So I do like that, and with it losing its slope right here, as momentum also has turned back down around, it's not good. Again, I want to bring the attention to the monthly Stokes and monthly RSI. The monthly RSI especially, this one, very bad read here. Very bad read in my opinion. But again, a monthly takes, takes a while to play out. So there's going to be the ebbs and flows of the market. And again, I actually do think that it's quite likely that we test around the 10 simple again. But that to me is going to be a pretty obvious sell. Again, doesn't mean it's going to 100% work out. I mean, maybe weird shit happens, of course, but I am as a trader, I'm more than happy to take that as my edge, when it gives it to me, because it doesn't happen all that often. Let me just make sure that the microphone's working. It is, and also we're recording, so that's great. Anyways, let's see, what else do we want to talk about while we're here? Let's go over the 3-day and the 2-day. I believe on the 3-day, we came all the way down to the 200 exponential moving average, so, we probably do bounce lower time frames here. It does kind of make sense as an area. So yeah, 74.50, 75.50 was where I'd be looking for short term, sometime like maybe early this week, and then probably rejection there. 2-day, I believe, is set in stone as well, and the 2-day is very nasty here. Confirmed rejection of the 200 exponential moving average as a 10 simple crosses below, both downward slopes, and really looking like it wants to come back down to 71.50ish region to me. Sometime this week, I'd imagine. 2-day Stokes are going to be crossing up here, which is interesting. However, 2-day Jewel is in a bearish posturing, and we do see 2-day RSI getting rejected by the exponential here as well. So, it's likely that we actually do take another drive down, and then we will sit in some bullish divergence here, and then I'd probably be looking for maybe potentially a bounce to the upper 7,000s, maybe even maybe even low 8,000s. That's where I'd really like to get a long-term position in, and I will be patient for that. But patience is not always a virtue, contrary to what your priest is telling you. Unless if you're praying to bear Jesus, he might be a fucking liar. Anyways, where did that come from, man? Anyways, I want to go back down to lower time frames here just to kind of get an idea of what's going on. Man, this is just intense pressure. Let's see, what does even like a 15-minute look like right now? Got some of that hidden bearish divergence now, don't we? Probably coming back down to 72.80, 72.90. Crazy shit, right? Anyways, maybe I might even take a trade on my other screen right here. Let's see. I'll set it up. Maybe I might get hit. Maybe I don't get hit. But if I get the setup that I want, I'll take it. No problem with that. Anyways, okay, what else do we want to talk about? So we talked about the 3-day, we talked about the 2-day, we talked about the daily, we talked about the 12-hour. What about the 10-hour? 10-hour looks pretty wrecked as well. 7,500, there will be pressure around there. If we do pop back up, short term probably does provide a little bit of a nice pivot. So, I'd say short term, this is a little bit difficult to trade here. We could very easily pop back up to 74.50, 75.50, but until we really start closing 2-hour dildos above 75.50, there's no talk of another move back up to that 77, 7800 region. If we do get that though, I would be looking towards about 77.50 once again, with only a 2-hour dildo close above 75.50 we'll call it. And realistically, no talks of like a major reversal here until it's not even really appropriate right now, I suppose, to even discuss. Okay, cool. So let's go back to the daily, and I want to do a little bit more of a deep dive on this whole thing, and really flesh out the bearish case, because there's something not necessarily new going on right now, but we're seeing this emerge. So first and foremost, I want to focus on all these guys actually. We'll take off this one for now. Okay, so there's 4 moving averages on the table. First, I want to focus on the white 200 simple and the purple 200 exponential moving average right here. You can see that, and sorry, just knowing that an exponential is more reactive to recent price action, that when the 200 exponential moving average is above the 200 simple, generally bullish, when we're below, generally bearish. And right now it's below, and we're generally bearish. Below, before over here, for example, it was above, we're generally bullish. Same thing during 2018, gets below right here. That's your nice bear mark for the next year. And before that, it goes to the upside, like way on over here in 2015 before the turnaround. And then same thing in the 2014-2015 saga right here, multiple times. So we can take that a few more steps though, as not only is it the crossing of those two guys, but it's also the divergence, which speaks to the strength of trend. Like when they're very strongly diverged from each other, then that's your very, very strong, move to the upside right here. That's a very strong move to the downside right here, right? However, and more importantly, I would say, is the slope of these two guys. When they both have the same slope on the same side of the cross, that is when things get quite nasty. So for example, they had the bear cross running over here, and they both got a negative slope right here. that was when things really got nasty for the next year or so, just getting sold down each and every time. Of course, this was pretty damn nasty right over here, but this really just wrangled it out. Yes, we did get another test of the 200 simple, which I would be defensive of. It's possible that we do pop back up there at some point, but that's going to start to move down now. And guess what? We do have a negative slope we do potentially have a negative slope coming into tomorrow on the 200 simple. It's kind of negative right now, but but as it stands, I would give it a chance to kind of extrapolate just a little bit here. I really want to see it like sustained for a few days, ideally. But even just getting that first positive slope, right here, boom, this is your consolidation, massive move up, almost to 2x from that point. Same thing right here, as we just spoke about, it's to the upside before that, same thing right on over here. And the slopes actually keep you in it a little bit better than just looking at a simple cross. And then same thing back on over here. The slopes tell you that this is a bull trap, and gets, make sure that you don't get caught in that. And then same thing right here to the upside throughout the whole way. And that's very reminiscent of what we're doing right on over here. We have a bull trap. It's not supposed to look exactly the same. This is why I don't give a fuck about fractals. I think that they're more misleading and more of a distraction than anything else. But looking at this right here, we do see the interplay between these two major moving averages, which these are very high period moving averages with a lot of iterations. So it does hold a lot of weight in my opinion. And at some point we probably do pop back and up and test at least a 200 exponential moving average. But the longer that we stay below, the more and more they will come down to meet price action. And let's just take that one step further. Let's look at the 21 and the 377, which we just initially saw cross a few days ago. And where's our last rejection coming in around? Right around that cross. So what can we look at in the past of Bitcoin to kind of, extrapolate from that? Well, it's a lot more of a less reactive cross than we have on the white and the purple, of course, but it's a stronger cross, as you can see. We got the last bull cross right here during this consolidation. That's what one of the things that made me massively bullish coming out of that consolidation, leading up from 5,000 to basically 14,000. But then the times before that we actually got the negative cross was a few times in 2018, but even just getting around there, it told you it was just like one step further after the 200. Essentially, it's like, okay, now we're really under pressure, and once they just started to get divergence away from each other, that's when the momentum took over, and we actually got the 50% move to the downside right here. And then same thing to the upside beforehand. We saw them have the bull cross right here for the next few years, straight to the goddamn moon, or gosh darn moon. Just kidding, goddamn moon. And then this guy right here to the downside as well, very similar actually, coming off of this bull trap, which is very reminiscent from a moving average perspective to what we're looking at in the proximal times on Bitcoin. And after this little breakdown right here in the stutter step before the further breakdown, essentially, very nasty, very fucking nasty. And then of course we actually don't have any more iterations on top of it other than that, so not too helpful after that. But again, once we have both these guys, which are very, very well respected crosses from a moving average perspective, especially in traditional market, Bitcoin land, not as much because there's not much history in it, but in traditional market, certainly yes. And I do think that with Bitcoin being about 10 years old now, it's really starting to come into play. And we have seen it work in the past, but I'd expect it to work even better now, is what I'm trying to say. So yeah, really, really nasty. No reason to be even short-term bullish from a daily perspective, as long as we're below the 377, which is 79.50. You can count that as a test as what we saw the other day. And then the 200 simple and 200 exponential average just looking very menacing above as well. Well, I'd also like to take a second to look at the simple moving averages and see how we're doing here. I'd imagine that they're all downward sloping. Yes, indeed they are. It's not good. Again, you're gonna have your bounces, you're gonna have your bear rallies, but everything's turning here, and it's been turning, and really wanted to see that monthly close above the 10 symbol for me to give some sort of an inkling of a hope that Bitcoin might produce another rally in the more proximal future. But hey, we're traders here, so can't really fall in love with this asset. And there's a time to be bearish, there's a time to be bullish, and I ain't fucking bullish, man. At least on the macro. On the micro, maybe. And it looks like I have a message on TradingView. Hey, don't fucking message me on hi sir, I want to buy your indicator. No, it's not for sale, man. It's not fucking for sale. Also, if you message me on TradingView, I don't know why, but I will, this is my own fault, but for whatever reason, I'll just always remember you. And I'm just like, man, this guy This guy's that guy who didn't make an effort to listen. And that's, again, that's my, it's not his problem or anything like that, man. He's just trying to, he just wants to get the indicator. I can understand that. I'm being unreasonable with my own behavior. Anyways, let's put back on all of these babies right here. I just want to check out the slopes of those guys. They're all downward sloping, and they all have the basically bearish spline of them with all the lower periods below higher periods. Okay, so let's go back to the weekly now, flesh out this idea, and basically anytime that we've had the 10 simple cross below the 21 exponential moving average, that has been, you know, pretty nasty moves to the downside. Last time that we had it was right on over here, getting this momentum down from last high to next low. We had about 73% down, right? The time before that was back on over here on this bull trap. And from the time of that last high to next low, we had a 78% down. And the time before that, we had a cross right here. The last high put in to next low was about, well, it depends where you take it from. We can take this a step further. It's actually better than this in a sense, 71% essentially. And then we don't really have a cross here, so not as much iterations, but we do have that same cross going on right here. More importantly, and what's held a lot more weight in Bitcoin land is just the slopes of these two guys. Whenever they both get negative slopes, again, the red 10 simple and the yellow 21 on the weekly, well, let's see what's happened. We have an example right here. So from last high at about 20,000 to next major low, this was your 70% retracement. I mean, you could even say the same thing after they cross the downside, and then they both get, well, nah, it's about the same thing right there. And to the upside, the same thing. You know, they both cross the upside right here, and they both get positive slopes. Boom, massive move up. Same thing running over here from 2015 to 2018, and then bear trap right here, right? They both get negative slopes right there. Last high to next low, 76% down. Same thing right here. Both get negative slopes right here. Prior high to next low, 71% down. Same thing right here. Both get negative slopes. Prior high to next down, 76.5%. And what are we looking at right now? Well, you guessed it. And last prior high, if we were to drag this one down all the way, that would put us somewhere right around, you know, well, low 4,000s. Remember, the low $4,000 number does actually match up with the target on this head and shoulders right here, which is going to be valid. The target of this head and shoulders right here, left shoulder, double head, right shoulder, is valid until we close a weekly back above the proverbial neckline, which we literally just got rejected from at about, like, to the fucking T at 79.50. So as long as we're below there, this measure move all the way down is viable. So where is that pointed towards? 4,300. Where was that last, you know, measurement that we just saw? Same area. What if we go over here to the BLX index and we look at the 377, because it actually has enough time to populate such moving averages? Well, you can imagine that, you know, in about February of next year, it will be in the mid to low 4,000s. Not only that, but a Fibonacci retracement from the ultimate high to the ultimate low of the last market cycle is showing the 786 activity right around low 4,000s as well, about 4,200, 4,300. That is where we actually did bottom out in 2014, 2015 market cycle as well, and also the one prior to that. Actually, no, we did not bottom out on that one on the prior market cycle. No. So again, you know, it's an area of interest, right? Nothing more than that. So look on over at my other screen. What's going on here? There you go. Anyways, so yeah, let's take this another step. Let's start looking at some fundamental indicators. Remember the hash ribbons that we were bringing up a couple weeks ago? Well, if we can bring them up, that'd be great. There we go. Let me get onto a daily right here. One day, okay. And remember, we saw the crossing of the ribbons, my friends. And this was the exact same signature that we got. Well, I guess we could have used that chart too. This is the exact sort of same signature that we got back on over here in November of 2018. That was before the dooms dropped from 6,000 to 3,000. So we basically got about a 50% drop off this price action, right? 53% right there. And we're getting the same sort of divergence between these two guys that we saw in the past. So I would look for a similar reaction in a sense. And just doing some mental maths on this one, you probably kind of know where this one's going. But if we got the signal right here, right around about 8,400, if we were to shave about 50% off that price action, where does that put us down around? Mid to low 4,000s. What if we go over here to the Bitcoin VWAP ratio, which I've been harping on quite a bit recently for like the last couple months? Ugly, very, very ugly. So I don't want to go through the full explanation right now, but I suppose I will. So basically, there's a lot of moving parts on here. And to explain the VWAP, it's just the volume weighted average price, and then we have different moving averages on this volume weighted average price. The blue being the most reactive, the purple being the middle, and the pink being the least. And basically, what's going on here is that anytime we see all three of these moving averages on it get above where my curse currently is right now, you're generally bullish. When they're below, generally bearish. And then the divergence between those two, those moving averages on the VWAP speaks to the length of that trend. So this one over here getting very much diverged, that's a very strong uptrend, of course. And same thing to the downside right here. I mean, this was a pretty nasty one, and this one right here, pretty nasty one. But then more importantly is the relationship between those two guys. So in your strong bull marks, you want to have your most reactive above your middle reactive, above your least reactive, all above that regression that I was kind of like drawing through this area right here, right where my crystal currently is right now. So this is your perfect bull market right here. This is your perfect bear market right here. And even just getting the purple below the pink, below the regression line in the past, has produced pretty much all of the nasty pullbacks in Bitcoin's history. The last time that we had an example was right here from about 8,400 to next low 3,000. We already measured that one out. It's about 70%. The time before that was right here, purple below pink, and actually the blue didn't even get below on this drive from 20,000 to 6,000. Another 70% drop back as well. Time before that was back on over here on this bull trap. They all three go down at the same time. Very, very nasty. 70% pullback as we measured out before as well. And then the time before that was this parabolic high. And as soon as the purple goes below the pink, the top is called, and the next low, 70% lower than that top, is put in. Same thing right here. 70% drop back from this area to this area. And this one over here, a little bit of an outlier, going about 94% pullback from that region. From signal given. So again, just another thing that kind of, and we already measured all these guys out, and you already know where I'm going with that. Seeing as we have that same sort of signature, last high shaving off about 70% from that on average to next low, somewhere in this region here, like low 4,000s. I mean, shit, man, even just playing the weekly trend, anytime that we've gotten anytime that we've gotten a downtrend on the weekly, well, that has been all the major market shifts. All you've had to do is play the weekly trend on Bitcoin for the past eternity, and you've gotten all of the perfect moves to the upside and all the perfect moves to the downside, pretty much. Right here we get a downtrend on the weekly. Next year and a half is straight down. Right here we get an uptrend on the weekly. Next half year is straight to the upside. Same thing over here to the upside. Same thing over here to the downside. Same thing over here to the upside. Same thing over here to the downside. You already get what I'm going for that. And again, 70% to 75% on average. Let's take this one step further. Let's go look at the Bitcoin difficulty ribbons. We're actually seeing convergence on these guys now. We're actually seeing convergence on them. And funnily enough, I'm starting to notice a trend here. All of these vertical lines that you see, these red vertical lines, these are the halving dates, I believe. And the funny thing about that is that we typically do contract into that. You can see right here, contraction phase. You can see right here, contraction phase. And we are seeing contraction happen once again, as we're about 3-4 months away from it. I believe it's May of 2020. Correct me if I'm wrong on that one, please. But it does look like it's contracting going into it, which does tell me that, at the very best, we range between like 7 and 8 or 7 and 9 coming into the next halving. And at worst, we see a legitimate contraction phase where we get, a move down into, probably below 7, probably below 6. So now I want to speak and let's also look at the Bitcoin Rvt ratio. The Rvt ratio has shown that, and I've been explaining this one wrong in the past. I want to apologize about that. I always want to be very, very open and honest when I am, when I'm just wrong about something. I was looking at just the moving averages on this. They're literally just literal moving averages, like the 200 day and the 200 week. Funnily enough, they get things pretty damn well. Whenever we lose the 200 day, that's your 70% pullback, right here, and right here, and we lost that on the move up or that trap up to 70 above 9,000, and then all the lows have come in at the 200 weekly, which I don't know how they got all the way down here, because there's not 200 weeks to populate a moving average here, so it doesn't really make sense to me, but fair enough. Anyways, the Rvt ratio is this brown oscillator down here, and you can't, if I could draw trend lines here, you could see an obvious trend line kind of governing the highs coming in all the way back from here, and you can see kind of where it likes to bottom out as well too. maybe even a trend line on the downside as well. Anyways, my point is that anytime that we do lose a 200 day, we do come down and put in a low, typically around the 200 simple on the weekly, and we see the RVT get down into this region as well. As you can see, it's got, you know, quite a ways to go right now, or not quite a ways to go, but it has some airtime down there, of course. So just another thing. Man, we've really beat this horse to death right now. Let's go look at expected moves. How long have I been doing this video? 40 minutes. All right, great. First standard deviation to the downside is all the way at 7050, 7100. So shit, man, we actually could make a beeline for 7100 today. Wow, strongly angled to the downside too. I'm curious, what would like end of year prediction be? Given these inputs. Oh, sorry, this is 2 days. I apologize. It's really more like the first deviation is right around 7150. So yeah, if we do have another leg down today, I'd be looking at 7150 and probably a small bounce there. That's, you know, most likely thing to happen really. To go below 7150 today would be less than a, like 16% chance. As it's just one side. Yeah, so yeah, 16% chance. To go below 6,900 today, less than like 2.5% chance, and to go below this is like less than 0.5%. So yeah, into the upside, I mean, same thing, you know, to go back above 75.50 today, very unlikely. So 75.50 is a good pivot, and I do like how that lines up. So I'd say from a lower time frame perspective, I don't have an opinion on this. Like Bitcoin can rally up to 74.50, 75.50ish region, but it's not until but I'd be looking for strong resistance at 75.50, and that's exactly where we had this nice like tampon of destruction right there. So, you know, it's a pivot point for the lower time frames. As long as we're below there, short-term direction is down. We can have bounces up to there, that's fine, but the trend is down here. The 4-hour trend is down. We have lower lows and lower highs, you know, once again. So, you know, perhaps we do rally up, you know, midday here, put in another potential high right here, and then crumble back down, you know, sometime this coming week. So overall, lower timeframes, I'm not so confident on Bitcoin right now, and I always want to be very open about that as well. I'm not really confident about the lower timeframes right here. The higher timeframes are what I've been waiting on, and we do have clarity on that situation now. So I'd really like to be a seller somewhere in the upper 7,000s if I can. If I'm going to be a patient boy for Christmas, I might even get my wish. And I might even be a buyer in the lower 7s because I don't necessarily believe that we're ready to break down just yet. It probably takes another month or two. Anyways, okay, cool. So let's go check out dominance. See how that's doing. What do we have here? Imagine it's probably, I'm curious if it's moving up with Bitcoin price action moving down. No, not necessarily, but I do think that we are going to rally off this region. I still would say over the next few weeks, we probably do work our way back up to 70%. Probably going to see momentum also to start to turn back up too. Yeah, weekly Stokes are using up a lot of their energy here, and we're not really breaking down below anything that matters all that much. Other than that, don't really have too much to say about it. I'd imagine that most alts actually rallied this last day then. Let's see, what is Cardano doing? My lovely shitcoin you. Actually, no, it's kind of just going sideways here. I do think that is putting in a top. I think that most alts are likely putting in tops versus Satoshis within this region. I'm not saying that they're ready to like trend to the downside, but I do think that they put in tops here and then come back down to like the middle of the range. So some like Cardano will come down to like 500 Satoshis, maybe a little bit less. Link, probably same thing as that. Link's actually breaking down a little bit more aggressively. I think Link weekly might actually have lost it. No, it's, I mean, still long term it's fine, but it is starting to look a lot more likely that it comes down to like 25,600, 25,500 region. Kind of a little bit of a fake out to the upside breakout here. Of course, I'd want to wait for the weekly to close, but if the week closes anywhere below like 31,500, I would be looking for this to come down ultimately to 25,500, 25,600 region. Let's see, what about total market cap? I'm curious what that one looks like. Where is everything? Oh, that's because I took them all off. Anyways, let me put them back on right here. There we go. Alrighty, lovely. More or less the same chart as Bitcoin, really. Which reminds me to speak about this. So I've been talking about that low $4,000 number. Keep in mind that as a trader, I don't trade for that right now. I'm overall, my bias is bearish, medium long term, I suppose. Like super long term, I guess I'm still a crypto bull or Bitcoin bull because I believe in Bitcoin, I suppose. But that, could be a long time away, and I think it will be a long time away. But I go level by level as a trader. So until we actually close at the very least like a daily below this low right here, like 6,900, I mean, have to treat this area as a potential low, which I don't think that it holds, but technically for now, it's still above, that's fine. But plenty of things say that we're likely going lower. The next area that I look for potential reversal, very, very strong likelihood for a bounce, but potential reversal would be around 5,500, which is actually going to be right around where the 200 exponential moving average is going to be meeting price action relatively soon. And if that bounce fails, and we don't get a reversal, then yes, I would be looking down towards that low $4,000 number, mid to low 4,000s. And at that point, I'd really want to see a bounce. Otherwise, it's going to be a little bit too wrecked for me to care about this asset anymore. You're going to see me go from a Bitcoin believer to a Bitcoin not believer anymore. It'd be hard for me to believe in Bitcoin at that point, longer term. I mean, maybe it still does salvage itself. Maybe it does double bottom. But as a trader, I'd rather go trade something else at that point and just kind of watch Bitcoin from afar. I'd really want to see another uptrend formed on a weekly before jumping back in. Because on a lot of the exchanges that I'm on, I have to hodl Bitcoin as collateral, and well, of course you can cover yourself with that with a just shorting your account equity. It just makes things a little more difficult than I want to deal with. And when you have something like Forex, which is just playing so fucking technically right now, I would rather go play that game. It's just easier. Anyways, let's go check out the other top shitcoins. What about Mr. Buterol? 148, spot 6. Weekly, still in a downtrend. Daily, does the daily close above the 10 symbol? Maybe, maybe not. If it does, we probably do get another rally back up to like 158, 160-ish region. However, if the daily close below the 10 symbol, we're probably going to see Bitcoin do the same thing, and we probably get another move back down to the low side of the range, like 143, 144 region. Litecoin, I'm gonna match them probably the same thing as well. Litecoin's very far away from the 200 simple now. Holy shit, man, that is just very nasty and very ugly. It's not good. I mean, even the weekly jewel on Litecoin is like pressure. This you're getting like a sell signal in like already the very pressure on territory. I mean, goddamn, man, that is just nasty. No divergences to be found anytime soon. I mean, this thing would have to get literally back above $64 on a weekly closing basis to even get a higher high. And the 200 simple and the 200 exponential moving average are both below that point. It's heavily bearish. Wow. Again, it can rally back all the way up to the 10 simple at 54.5, but I'd probably be a seller there. It doesn't look good. What about Stellar? Another weekly downtrend, making new lows, literally trending down. Probably looking for the next potential bounce area in the 4.5 cent region longer term. Monero, same thing, had a pretty damn good reaction up to the 10 simple on the weekly, but so far rejected. And as long as we're below this little stutter step at $64, I would be overall bearish. Just saw the weekly 21 cross to the downside of the 200 exponential moving average, not good. Ripple me nipples, wow, very far away from the 200 simple and 200 exponential moving average, which are both below the prior high at 30 cents essentially. Not good either. What about EOS? Same thing. Neo, same. I'd be looking for back down here towards like $8. Tron. If we do take out this prior week's high, then yeah, I probably would be looking for another test of the 21 at 1.9, but things are looking more down across the way than anything else here. So I'm gonna wrap this pitch up and then send you off. Bitcoin, pressure on, man. While lower time frames kind of look like they do maybe want to bounce somewhere around here, and we probably do get some sort of a bounce this month. I'd really like to see a test back up into this region, like at the very least, before considering a long-term position. The monthly closure is very, very nasty to me, and it makes me it makes me not look at things as overall good. Like I said, to the downside, if we did hit 7150, 7100, I'd probably be looking for a decent sized bounce there. But for right now, man, lower time frames are trying to put in a little bit of a low here, but I don't feel strongly about the lower time frames. I don't feel like I have a good read on the lower time frames right now. If I had to call the lower time frames, I'd say we probably bounce from this area, put in another local high somewhere around like 7450, 7500, and then curl back down. But I'm not married to that. It's the higher time frame levels that I'm more watchful of. 7150, probably bounce there. And then anywhere in the upper 7,000s, like around 7750 to 7950, I'd be looking for another high to be put in. And I'm overall bearish on Bitcoin, basically as long as we're in a weekly downtrend, which we might be setting another lower high like here. So yeah, man, hard chart to love right now, unfortunately. Daily, as long as we're here's what I can leave you off with. Daily, as long as we're below this last little prior high at 7750 and closing daily dildos below there, which is well below both the death cross and the 21 and 377, all very important, all very strong, as well as our simples start to curl down and get negative slope. Oh my god, man, it's bad. I am overall bearish. We can pop back up there. That's completely fine. But I'd probably be looking for, another high to be put in around there if we were to get back around there. So for right now, Bitcoin under pressure. If we do see 12-hour Stochs cross down in this next day or so, I would be looking for another move back down again to about 7,100, 7,150. Probably short-term bounce there. Come back and reassess on the lower time frames as higher time frames really set the trajectory. So for right now. Not the best looking chart in the world. I really wanted to see continuation in the lower 8,000s on that last drive to actually get a position. It looks like patience, not a virtue for myself. So with all of that said, I do want to wish you well on this nice little Sunday, a Goat Jesus Day, as I get prepared for my own feast, as I need to eat a shit ton of food, man. I'm so goddamn hungry right now. Wishing you well from a very cold Helsinki, Finland. Take care, and until next time.